Hello and welcome. Today, we're pulling back the curtain on HMRC's digital detective work. We're going to explore how the UK's tax authority uses some seriously powerful technology to track undeclared income. And you might be surprised by just how much of our digital and financial lives are connected.
Right, before we jump in, I want to mention that all the insights we're about to go through have been carefully put together by the tax experts over at My Tax Accountant. They've given us a fantastic look behind the scenes at HMRC's modern capabilities, so you know you're getting the real story on how this all works. Just think about it for a second. That amazing holiday you posted on social media, that shiny new car you've been driving, or even that little side hustle you've got going from your kitchen table. You might see them as just parts of your life. But to HMRC, they could be crucial data points. And as we're about to see, they're connecting those dots in ways you'd probably never imagine.
So here's what we've got on the agenda. We'll start with HMRC's powerful surveillance system, then we'll see how it builds your digital footprint. We'll also cover why hiding money offshore is basically impossible now, and look at how new income from crypto and the gig economy is being targeted. And crucially, we'll talk about what to do if HMRC gets in touch, and how you can stay compliant and out of trouble.
All right, let's get straight into our first section, HMRC's all-seeing eye. This is where we meet the powerhouse system at the very heart of the UK's tax system.
So let me ask you a question. Do you think your personal finances are, well, completely private? It's a fair assumption, but in today's world of digital everything, the idea of total financial privacy from the taxman is, let's just say, it's fading fast. What you might see as separate parts of your life, HMRC sees as one big interconnected profile.
And this is the tool that makes it all happen. It's called Connect. Now, this isn't just some big spreadsheet. It's an incredibly smart, secret data mining system. Think of it like a digital detective that never sleeps. It's constantly scanning billions of pieces of information to build a detailed financial picture of you, looking for any little thing that doesn't quite add up. And if you're wondering if it actually works, oh yeah. Get this. In the 2025 to 26 tax year alone, investigations powered by the Connect system helped HMRC bring in an extra, wait for it, £4.6 billion. That's a huge number, and it just shows how incredibly effective this digital detective has become.
So, the big question is, where does Connect get all this information from? Let's dive into how it pieces together your digital footprint, leaving pretty much no stone unturned. And stay with me here, the next point might actually surprise you.
Okay, look at this list. It's the sheer range of sources that's mind-blowing. Of course, it's looking at the obvious stuff, your bank accounts both here and overseas. It's checking the land registry for property sales and the DVLA for car purchases. But then it goes so much deeper. It's pulling data from places like eBay and Etsy, rental platforms like Airbnb, gig economy apps like Uber, and yep, even your public social media posts. Your PayPal transactions, your credit score, it all gets fed into the system.
Okay, let's make this really simple with an example. Let's imagine a freelancer based in London. They've done all right for the year, and on their self-assessment tax return, they declare a perfectly reasonable income of £25,000. Seems straightforward enough, right?
Well, this is where Connect works its magic. The system sees the 25 grand declaration, but then the algorithm starts pulling in all that other data. Uh-oh, the land registry shows our freelancer just bought a £500,000 flat. The DVLA has a record of a brand new luxury car. Their Instagram is full of amazing shots from a 3-week holiday in the Maldives. And data from Airbnb shows a nice, steady, but undeclared income from renting out their spare room. See, individually, none of these things are illegal. But when Connect puts them all together, it screams lifestyle inconsistency. The spending just doesn't line up with the earnings, and that's what triggers a big red flag. Okay, time for a quick pro tip. If you've got a small side hustle, you need to know about the trading allowance. This lets you earn up to £1,000 a year from that kind of work completely tax-free. And the best part, you don't even have to tell HMRC about it. It's absolutely perfect for anyone just starting out or making a little extra cash.
For years, a lot of people thought that if you had money or assets offshore, it was out of sight, out of mind for HMRC. Well, as we're about to see, the world has changed. The global net is closing in, and the age of offshore secrecy is well and truly over. And the reason for this is a huge game changer called the Common Reporting Standard, or CRS. Basically, it's a global agreement where over 100 countries, including places that used to be known as tax havens, now automatically share financial information. This means that every single year, they send data about UK residents' bank accounts, interest, and dividends straight to HMRC. There's literally nowhere left to hide your money.
And if you think you can get away with not declaring it, think again. The penalties for getting caught with undeclared offshore income are incredibly severe. We're talking penalties of up to 200% of the tax you actually owe. That's double the original tax bill on top of the bill itself. It's a massive risk to take.
Now, HMRC isn't just looking at traditional 9-to-5 jobs. Not at all. It's moving with the times and adapting to the modern economy. So now, let's look at its new focus: the fast-moving world of cryptocurrency and the massive gig economy.
There are two new sets of rules here that have completely changed the landscape. First is digital platform reporting. As of 2024, this rule legally forces platforms like Uber, eBay, and Airbnb to collect their sellers' income data and report it directly and automatically to HMRC. And then, starting in 2026, we've got the Crypto Asset Reporting Framework, or CARF. It's going to do the exact same thing for crypto, making exchanges report user transactions. The key takeaway here is huge. The responsibility for reporting is shifting from you to the platforms, which makes it almost impossible for this income to fly under the radar.
So what happens when Connect does find a discrepancy and that red flag goes up? Let's walk through the process HMRC follows, from a quiet little prompt to a full-on investigation. And that's not all. Here's where most people tend to go wrong.
It usually starts off quite gently with something called a nudge letter. It's an automated, pretty informal letter that basically says, hey, we've got some information here that suggests you might want to have another look at your tax return. If you ignore it, things escalate to a formal inquiry. From there, HMRC can issue legal information notices, where they demand documents and records. The final stop is, of course, the financial penalties, which are calculated based on why the mistake happened and, crucially, when you decided to tell them about it.
And that brings us to what might be the most critical point of all. Timing is everything. There's a world of difference between an unprompted and a prompted disclosure. If you spot a mistake and you tell HMRC before they even know about it, that's an unprompted disclosure. You'll get the lowest possible penalties. But if you only fess up after you get that nudge letter, it's considered prompted, and the penalties will be much, much higher. Being proactive really does pay off.
Okay, so we've covered a lot of ground. This brings us to our final section: how you can stay safe, compliant, and on the right side of HMRC. Let's wrap up with the key actions you can take to make sure you're doing everything by the book. So, let's quickly recap the golden rules. First, and most importantly, just assume that HMRC can see all of your income streams. It's the safest mindset to have. Second, keep detailed records of everything. This is absolutely non-negotiable, especially for side hustles. Third, make sure the life you're showing online and living in the real world matches the income you're declaring. Fourth, if you realize you've made a mistake, tell HMRC right away. An unprompted disclosure will always be your best bet. And finally, if you are ever unsure about anything, please get professional advice.
Now, just a quick and important note here. The information we've gone over today is for general guidance. It absolutely shouldn't be the only thing you rely on to make financial decisions. Everyone's tax situation is unique, so it's really vital to get advice that's tailored specifically to you.
And for that kind of expert, personalized advice, we highly recommend getting in touch with the team at My Tax Accountant. They can help you sort out any issues you might have and make sure your tax affairs are completely in order. You can give them a call on 020-8570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. Thanks so much for watching.